We're going to look to scale Russell 2000 broken wing put butterfly. In this video, we're going to cover a couple of different points. We're going to talk about DTE. We're going to talk about strike selection. We're going to look at trade management. That includes upside scale, downside scale, and we're going to talk about profit target and a potential stop loss in this trade. So the first thing we're going to touch is on DTE. This trade doesn't have some secret holy grail sauce that will tell us exactly when to enter or what duration to look at. We simply want to look at an expiration cycle that is somewhere between 45 and 60, maybe 65 days to expiration. We need to keep in mind that the further out in time we go, the smoother T+0 line will be in the beginning of this trade, so we can be very wrong at first, and this trade is going to be very forgiving. So we're going to look at about a 60, 65 DTE. Right now it is December 20th option expiration with 64 days until expiration. So that will take care of our trade duration. Then we're going to hop over and look at strike selection for this trade. Russell right now is trading right at 1537. So we're going to try to position our tier 1 somewhere about 15 to 20 points below where Russell is currently trading. So with Russell trading at 1537, I think it's a fair assumption that putting the trade at 1520 is a good way to start this trade. We're starting this trade with very little, if any, net delta exposure. We have slightly positive theta right now, and gamma is also insignificant. So putting this trade at 1520, we're going to use a 70-point wing on the downside, which is right at 1450, and we're going to use a 50-point wing on the upside, right at 1570. So buying 1 1570, selling 2 1520, and buying 1 1450 will make it a out of the money broken wing put butterfly with a 70-point wing on the downside and a 50-point wing on the upside. Now we're going to look to scale into this trade as price potentially moves higher. We're going to look to enter tier 2 and then potentially tier 3. And the trigger for those entries is going to be, for tier 2, we're going to look to enter a broken wing put butterfly when the price of Russell 2000 is trading about 30 to 40 points above short strike of tier 1. So if tier 1 is at 1520, we're going to look to enter tier 2 when Russell is trading at about 1550 to 1560. And we're going to position tier 2 20 points above short strike of tier 1. So tier 2 is going to be centered at 1540, and we're going to use a 70-point wing on the downside and a 60-point wing on the upside. On the downside, we're going to look to manage the trade if Russell is trading about 40 to 50 points below short strike of tier 1. So if tier 1 is centered at 1520, we're going to look to do something on the downside when Russell 2000 is trading at 1480, maybe 1470, which is right around where our current downside break-even point is. Our profit target in this trade is going to be around 10 to 15% return on our invested capital. So whatever the margin that is required to hold the position, we're going to look for a potential return between 10 to 15%. Now, for a stop loss, we're going to use about a 15% on margin as a mark for our potential P&L to signal that it's time to get out of the trade. Keep in mind that should only apply to a fully scaled butterfly. So if, for example, our fully scaled butterfly requires $8,000 of margin, when we see a P&L that is showing a loss of about 15% of $8,000, which will be about $1,200. So if we're at any given time, we're down $1,200 on fully scaled broken wing butterfly, that should be a signal that it's time to close out the trade and potentially look to set up a new trade. So what we're going to do now, we're going to buy to open a broken wing put butterfly in December 20th expiration cycle. We're going to buy 114.50 put. We're going to sell 2 15.20 puts, and we're going to buy 1 15.70 put. Current mid is showing about 380 to 390 debit. So we're going to try to get in as close to mid price as possible. Maybe we'll pay a little more and get in for a $4 debit. And we're going to look to scale into tier 2 when Russell is trading somewhere between 15.50 and 15.60. Trade them well.